Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, January 19th, 2021. I wanted to follow up on the earlier post and the recent updates I've provided on the euro, the US dollar. Talked about the extremely strong correlation, positive correlation with the euro and the stock market. Remember, the euro and the dollar are inversely correlated. One goes up, the other goes down. Whereas the dollar in the stock market also has that inverse correlation. So when you look at the euro, it gives you that positive correlation, meaning they both move up and down at the same time. Now, I wanted to make a correction to this morning's post. This was the chart I posted today, and I actually got it flipped around. I mean, the correlation's so tight, just kind of messed that up. The SPY is actually in purple, the S&P 500, and the euro's in white. So disregard that labeling. You can see it right up here. SPY is purple, FXE, which is a euro ETF, in white, and you can see the almost perfect correlation. There are times where one might go one way briefly and the other goes the other way, but other than that, they tend to move in perfect synchronicity or near perfect synchronicity. And the thing I've been harping on lately is we had the breakdown in the euro, clean sell signal. It wasn't just a random drop. We broke the the uptrend line. We had negative divergence, everything. And the euro from this point right here started to correct. And it's had a pretty healthy correction. So you look back in time, you don't see a drop of this magnitude. And again, it's not a huge drop without a concurrent drop in the S&P 500. So one or the other is going to happen most likely. We're going to get a mean reversion. The S&P has had a little weakness since then, but not near again, it doesn't mesh with prior drops. And more so, like I said, it's a breakout. So a couple, we'll call them caveats to this, if you will. Number one is, again, as I said, there are periods where they can disconnect, and sometimes you can disconnect even longer than that. In other words, they can go two different ways, the euro and the stock market. But again, this lays it out pretty clearly. And the other caveat is that this mean reversion, should we get it, could mean that the euro comes back up and the stock market continues to rally. That the breakdown in the euro, maybe that's it. I don't think that's it. And that's why I'm doing the video. But I'm going to show you levels to watch. At the end of the day, it's hard to argue this correlation. So again, if we continue to see the drop in the euro, the rise in the dollar, sooner or later, I believe the market will play a game of catch up. And if it goes the other way, if the stock market continues to go up, maybe we'll play a game of catch up with the euro, and that means euro up, dollar down. So we're going to look at a few other charts, and I want to add something else I haven't covered with you guys lately, and it's the correlation that the euro and the US dollar have to not just the stock market and other dollar sensitive assets. Like crude typically moves inversely to the dollar, gold typically moves inversely to the dollar, but believe it or not, Bitcoin has a very tight correlation. Let me pull that chart for you. Okay, what we're looking at here, this is a daily chart. That last chart was 60 minutes. So we're going all the way back. This is early 2017 down here on the bottom. You can see the date scale. There's beginning of 2018, 2019, and so forth and so on. So there's the beginning of 2017. And you talk about an unmistakable or a very tight correlation, I should say. This time I do have them labeled correctly, GBTC in white. That's Bitcoin. That's Bitcoin Trust. It's a lot like an ETF, more maybe like an open-end or closed-end fund, but it's an ETF or an exchange-traded product that directly tracks or attempts to directly track the price of Bitcoin. So there's something, you don't have to open a Litecoin account or whatever one of those if you want to trade Bitcoin. We can look at Bitcoin futures, which we will. Let me jot a note down on my pad real quick to cover Bitcoin futures for you that trade that. Okay, so this is the euro. And again, we could flip it around. You could alternate UDN, which is the inverse dollar ETF or ETN instead of XE. They're going to look the same. And bottom line is look at the correlation, not just when one's rising. Look at all these minor inflection points. When one peaks, the other peaks, and you have those corrections. This case, the Bitcoin peaked a little before the euro, but you can see the major trends have been together. Now, here's a period where euro was falling for a little bit while Bitcoin was rallying. So again, I like to point out that you can go off these relationships and there are times where you get a disconnect, but then usually there's that mean reversion, and you can see it there. And then both started moving together again, and both bottomed right here when the market melted down into the the March lows back last year due to COVID and all the shutdowns, and then boom, again, almost perfect correlation. But look at this divergence here. There's the euro dropping sharply, something I've been harping on. That's why I'm, not trying to beat a dead horse here. I think there's going to be a mean reversion one way or the other. This is the, Bitcoin going one way and the euro going the other way. And usually when that's happened in the past, it's been very rare, relatively fleeting, but relative can be a few months. So, we want to look at, other sell signals there. But if you're trading Bitcoin, that's one to watch for sure. Here's what it looks like on my daily chart. Forgive me, I haven't updated this in a while. I have old lines with trading it back here. And I don't have a very clean up trend line. So there's not a lot that jumps out on this chart. But again, going back to what I'm saying, if the, and we're going to spend at the tail end of the video, we'll focus a little bit more on the euro, both long term. Lately, I've been focused on the very near term outlook, looking at 60-minute charts, but we'll look at the daily and the weekly charts. And as well as the dollar, because again, I believe that will impact where these, the stock market goes and Bitcoin goes, and to maybe a greater or lesser extent where gold and some other related commodities go. So that's the daily chart of Bitcoin, but I like to use these two proxies when trading it. One of them is RIOT, RIOT. There's several out there. This one, if we get that, if the euro takes the next leg down, again, I'm going to get the euro charts in a second, then this is a nice looking short setup. Right now, like a lot of things, like the primary trend in the stock market, this is a bullish trend right here, clearly bullish. It's a price channel, but a pretty well-defined uptrend line. And a break of that uptrend line. I haven't updated the charts. I'll give you a level right here that jumps out to me as one potential target. This sucker moves. If you get 10% run in Bitcoin, you can often get even more than that in these what I call Bitcoin proxies. These companies that tend to ebb and flow because they're this one's RIOT blockchain, some blockchain technology. So there's a setup. Another one is Overstock. And I covered both of these. The last time I covered these was back here. For example, as a matter of fact, this one that broke down on August 25th. And on August 25th, I did this video right here, various swing trade opportunities. And one of the stocks I covered, about the 24-minute mark, a little before that, starting out, that's that same wedge. I zoomed in. This is that same exact wedge. In the video, I said we were just starting to crack the trend line, breaking down. Said if you get a little more downside, solid break, that's going to be a sell signal. And I don't know if you can make it out in here. I'll get to the other chart in a second. I said in the video, I had listed these targets, 1, 2, 3 targets, saying this one was my final target at 42.41 and that uptrend line. Again, that was in August. And where are we at today? That's it. That was August 25th, the day of the video. We went on. If I zoom in here, you can see that we did indeed break down. Later that day, we made a solid break, another red candle, and then started moving lower. And from that breakdown point so far, that short trade's been good for about 56%. And where I'm going with that is RIOT at the same time broke down. I was also highlighted RIOT as a short trade right there. It was a divergent high, and it dropped about as much. It fell from top to bottom about back there in late August, about 50% or so. But Overstock so far played out. And I want to mention that it's coming up to and I think it'll get there to that 42.41 target. These were the 3 targets I listed. 84.96. What happened? We hit it there, had a reaction for about 3 days, then broke it and back tested. This is a great example of technical analysis. I've not modified these targets since. Back test, back test, back test. Because remember, support once broken becomes resistance. So we had several back tests, couldn't hold it, boom, went down. And finally took out my next target there, the 62.95. Once that broke, we back tested a little overshoot, a little bit through there, and that's what we're continuing to back test that level. It's not as good as resistance now at this point because we've traded through it a few times. But again, this remains the next target, which is likely to be hit if that euro US dollar scenario plays out with more downside, another leg down in the euro and another leg up in the dollar. And that's a big if. I'm going to get to those charts in just a second here. I'll also point out that, although we reversed so far a little shy of that 42.41 target, there is some positive divergence forming. And, the whole basis for a, short on overstock back then was a clean up trend line and a bearish rising wedge. You had negative divergence at that high, and then the sell signal came. And now we have, if you look here, we do have positive divergence. So this might say, look, another leg up in Bitcoin. Look, Overstock can do its own thing, and I will say that it's lagged behind. So at this point in time, I can just say this: the risk reward on a short for Overstock is not nearly what it was. This was a time, that was highlighted as short. If anything else, it's a long here. Plus, Bitcoin has rallied quite a bit, with Overstock dropping, as I said, 56% just from the breakdown point, over 60% from the high. So it probably corrected enough, and again, I would consider at the very least tightening stops up if you happen to have taken that one. And still, well, yeah, I would still say if we get another leg down, if the euro rallies, that would be at this point in time the most likely final target on Overstock. And I already covered Riot for you. I've covered the stock market quite a bit, the correlation. So now let's just wrap the video up with analysis on the dollar and the euro. I'm going to start out on, well, we'll do the dollar, get the dollar out of the way. We can do that. I like trading the euro futures, watching that chart. It seems, for some reason, it seems to, at least lately, reverse and act better off the support and resistance levels. One thing about the dollar index, DX, this is the dollar index futures, it's a basket of the dollar against all other currencies, or at least the major ones. With the euro being the largest component by far, almost 2/3 of the index, then the yen at about 1/4, and then everything else is mixed in there, and that's why it gets a little sloppy on the charts. But bottom line, we did have a breakout. Everything I've covered, I don't want to spend a lot of time on it. Positive divergence, breakout number one, back tested for a while with this little price channel forming on the back test, breakout number two, and then breakout number three. The big one was right here above 89 and change. It broke out, back tested, and we've been moving higher. So say what you want about it, whether there's more upside, right? But it's hard to argue that the dollar is in a, well, I can tell you it's in a near-term uptrend with an intermediate-term downtrend. It's too early to say that we're in an intermediate or longer-term uptrend. There's quite a bit of work. I think if and when we take out that 91.081 resistance level that I've been talking about, next target, then I think it's safe to say that we're in a new intermediate term uptrend in the dollar. And this would have, like I said, bearish implications on the stock market, on Bitcoin that I showed you, and other dollar sensitive assets. So some work to be done. Let's focus on the euro right now. That's the one I posted this morning. So here's the euro. And this is that 60-minute chart I've been posting a lot lately. I'm going to just show you in a second the daily and weekly and give you my outlook there. So what you had are concurrent or parallel trend lines, with the blue one being the most significant. That was a BOD, or benefit of the doubt, trend line, because that's the second of the two to go. And there was a breakdown back test that's played out almost perfectly. I had originally one target. I extended that to a target zone. You had a reaction. We went sideways for a little bit and then bounced off it, pulled back down, broke it, hit the next target. That's what I just mentioned today. And as I showed you a minute ago, support once broken becomes resistance. So we have a resistance zone. We have a level right there. That's probably the bigger of the two, the more significant resistance right there at 1.2153, and then you have 121.94 up above the top of the resistance zone. And I'm going to give you a line right now, one other line, because it's really hard to gauge how far a bounce can go, even if it's a counter trend bounce. But I can tell you that would be about my uppermost target. So let me just say this. This is a bounce target zone. We're at the bottom of it now. We could turn down here or go up, and I didn't include this level. I just added that. I should have had that this morning, about 122.36. Why? Well, you have, first of all, if you took out that reaction high on the bounce, it brings into question this downtrend. we're in a very near-term downtrend in the euro. Remember, a downtrend is simply defined as any security making a series of lower highs and lower lows. And that's what we have here. So when we go on to take out this previous reaction high back here from the 12th, January 12th, then that brings in that near-term downtrend into question. It's also a technical level. You're going to see stops get hit. I'm sure a lot of people short in the euro right now would have stops at that level because you have not just that previous reaction high, you have a reaction low right there, you have a reaction high there. So that's it. And the sooner we turn down, the more bullish that is for the dollar, the more bearish for the euro. So if we could turn down here, and we've already had, since I posted that update this morning, if you zoom in real tight, we've had a reaction already. It's not much, but certainly a reaction off that level. As I said, that 121.53 level was the first resistance, and so far that's capped the bounce in the euro. PPO is crossing down right there. You can see we had some positive divergence. So that's it. Those are my near-term thoughts. I favor a move down to my third and at this point in time final target zone there, T3. Leaning towards the lower this level, but really it's more of a bounce range. And should we bounce higher, that's going to give a little additional upside, most likely, not guaranteed, to the stock market, to Bitcoin, to crude oil, things like that I'm watching. Okay, so this is also a 60-minute chart, but it's the Euro-US dollar pair, EUR-USD. A lot of charting platforms will give you this. It's a good way to track, you're seeing the euro against the dollar, how it's acting. Now, so also note there, positive divergence on the PPO, not on the RSI. You got oversold, but no divergence there. So it's something to watch. And these were the targets I laid out. We hit my first target, had a reaction there. Traded on it again, finally couldn't hold it, gave up, went down, hit my next target right here. That was just hit last night, Sunday, in Sunday's trading, and into this morning. And as expected, or as is usually the case, the initial tag of each target, you get a reaction on, reaction, and then you continue on down. So, and as far as resistance, I could add a few more lines at this point. These were my initial targets. I'm going to add one there. Where I see resistance, it's more of a zone, and of course there's that previous reaction high, so that's what you want to watch for on the euro-US dollar pair. My preferred scenario, but what I can say is a break below today's lows or last night's, I think it's early this morning's lows, should open the door for a move down to my next and current near-term target there on the euro-US dollar pair. That's very near-term, the 60-minute chart. Daily chart, here's what we look like. I listed a target there, first target of 129.43. They go out to the fifth decimal in this this security here, this forex pair, and we hit that. And as expected, there's a reaction. It was pretty good support. A lot of reactions right there, and it also goes back all the way to here. Back in 2017, we had reactions. So that line is not arbitrary. These were reactions. Once we broke that support, it started this meltdown or this downtrend. So these are your bigger waves. Bullish trend right there, and it started with, no surprise, divergent low, positive divergence, which is bullish, led to this uptrend here. That was the technical catalyst. There was our breakout above the downtrend line. Along the way, we had a nice correction with a small divergent high. We continued to push up, extended those divergences right there, and then finally broke the primary trend line, and that started this new downtrend, which ended here most recently with the divergent low. We had a divergent low there. Euro was starting to rally, and then the hit the fan with COVID, and the global financial markets didn't know what to do. Everything was all over the place, especially in currencies. But we bottomed out there. But look, it was pure technicals as well. Divergent low, it's simply an extension of the positive divergence. So we put in that divergent low, and it's been the catalyst again for this rally. So now what to watch on them? More significant daily time frame. Well, we had a trend line here, and it broke, and it led to a decent correction. That correction ended with positive divergence. It gave us the next leg up, and here we are. So let me just clear out all those lines and tell you what I'm watching now, and what formulates my thought as to where we're likely going. This is negative divergence that's been building now, and it's comparable, that divergence I just drew out, comparable to this divergent high here. Here's the thing. I expect more downside in the euro, and again, like I told you before, whether we bounce a little more or not, 50-50 coin toss odds. But there's a potential trend line that may come into play. I only said it's potential because we only have two reactions. I like to see at least three reactions. I'm trying to circle one, two. I like to see a minimum of three reactions to help validate a trend line. But what I can tell you is these are pretty good support levels. So again, it's a break under today's lows, whether we bounce first or not, to open the door for a move to my next target, and that is one. At least on this daily chart, I have it about 119.085. But again, you can use that 60-minute chart to kind of hone in a little better. And now let me tell you the bigger picture. And just keep in mind this euro-US dollar pair, it's like the dollar in reverse. When this chart is going up, when prices here are going up, it means the euro's rallying and the dollar is falling. And so, bigger picture. I remain longer term bullish on the euro, not bearish. Longer term bullish on the euro, bearish on the dollar. But it's just near term, near to intermediate term that I'm bullish on the euro. So what's happened? To recap, you probably recall this from months back. This was a primary downtrend line. I'm on a weekly chart now. This is longest time frame we're going to go out to here. And it was a very well-defined downtrend. I've been talking about it for a long time. It was a target back here. We had a bullish, low right here in the pair. There was a rally. This is what we were just looking at on the daily time frame. At this point in time, I pointed out we're at downtrend line resistance, negative divergence, looking for that, and that set the stage for that downtrend. And we came full circle with the positive divergence. So these are the swings in the market. Now, what do we have here? Well, a couple things. We have, first and foremost, probably the most significant thing on this chart is this breakout above the downtrend line. That was a long-term downtrend line, so that's a breakout, and that's longer-term bullish. And so we have, however, we have the small negative divergence that was put in place when we hit this resistance level I had here, about 122, 141 right there. Pretty decent resistance, nothing super solid, and so far we've had a reaction there. If you recall, that's where gold started topping out, but longer term, again, this looks bullish. So here's where I think things might go, and this is kind of and I'll watch and see how this develops. But if we continue to drop, and we get a pullback here. There's some minor support right here, decent support, and that probably aligns with my targets on the daily chart. So come down here and maybe go all the way down for a back test of the trend line. So that would look like this. We could back test there, so that's intermediate term bearish for the euro, bullish for the dollar, or catch on that resistance and then the next leg up. So again, longer term, I remain bullish on the euro, bearish on the dollar, due to the technicals, due to the charts, as well as some fundamental reasons, of course. But that's what I'm looking at right there. And I will say this: we don't have to get the back test. One thing about a breakout, when you have a negative divergence after a bullish breakout like this, you may burn through those divergences. I've seen that quite a bit. The breakout was pretty bullish, so maybe we only get that little minor pullback and then we continue to rally and this divergence down here goes away. It's not my preferred scenario, but something I'm open to. So if I can, if the correction in the euro and the rally in the dollar is over, if that's all it's going to hit, that target there, and it certainly meets the wedge projection. You go back, if you're looking at that E7, you take a bearish rising wedge like this, take the widest part of the wedge from here to here, measure from that part down to that blue trend line. It's roughly what we've dropped right there. So we've hit the measured target. Now that doesn't mean that we're the correction's over in the euro, but it could be. And I'm open to that, and I gave you the things that will start to convince me, as and if each of these resistance levels, especially this one up here, that 122.36, are taken out. Well, that's going to increase the odds that, hey, I got the call right on the correction of the euro. It didn't hit my final target. We've already had a healthy correction. One of the biggest in a while. And as I showed you on those correlations between stock market and Bitcoin, so far it's at this point unusual to see a rally or a drop this much in the euro and a rally like we've had in the dollar, and not seen it play out for a deeper pullback in the stock market and in things like Bitcoin. So either the street, those participants in the stock market, either they don't see this. Let me go back to where I was trying to get to this chart. Either they're dismissing this breakdown, this weakness in the euro, and we're going to rally up, or they're, what I'm trying to say is, yeah, either it's going to play out with a catch up to the downside in things like the market, stock market, and Bitcoin, or more likely than the euro, that's it, it's over, and we're going to continue to rally, and then the dollar will resume its downtrend. You can see U.S. dollar index right there. Everything I covered, there's the U.S. dollar, but it's set up pretty bullish, so we could see a pretty decent rally off this, these setups. So technically, that's where I'm at. I favor more downside in the euro, at least in the near to intermediate term, more so. Let's say several, at least a couple weeks out, and upside in the dollar. And if that happens, that's my thought process. It's going to spill over into the dollar-sensitive assets. And among those is crude oil, CL. But crude's up today, nothing huge, 1%, and not by mere coincidence, because the euro's up today. The euro hit support right around the same time right here that crude bottomed. Euro was falling, hit my second target, which was support, and bounced. And this is crude oil, by the way, CL, crude futures. And so if the euro is rejected here at the bottom of the resistance zone, again, we're looking at crude, but I have, on the euro, we were at the bottom. I've had 3 levels there, a resistance zone. Then crude will likely turn down. And then things I gave you like Gush last week, or what was it, Drip and XOP and XES, those will follow crude down. And if the euro's got a little more upside before it reverses, then crude could have a little more upside. If crude has a little more upside, all it's going to do, it's not going to change much in the technicals. We had divergence here. We equaled that high, extended the divergence. You can see the indicators continuing to fall. Prices made equal highs. And should we go up and make another equal or marginal new high like this anytime soon, we're still going to have negative divergence. So that kind of meshes with that scenario in the euro, that we can see a little more upside in the euro and still keep, this intermediate term bearish outlook on that I laid out on Friday on the energy stocks, or at least Thursday afternoon, and then again on Friday, energy stocks and crude oil and things like that. So that's where I'm at right now. It's been a slow roll, if it is a roll in the markets, and like I said, nothing even close to a sell signal in Bitcoin right now. I'm just laying this stuff out because if we get it, the one thing I can tell you about Bitcoin and Riot and all those others and Overstock is when they change trend, they can move pretty fast, especially those guys like Riot and Overstock. I mean, Riot right here broke out above this 428 level, and it ripped. But when it broke down to it, tends to fall hard. This is a very steep run. It's a near parabolic run. It's not exactly parabolic, but close to it, or near vertical run. And those, from my experience, those near parabolic or vertical runs, they just don't end well. They're usually followed with an equally impulsive drop to the downside. You usually don't see, this one had a little consolidation along the way, a little bull flagging action, but once the run was over, that's it. And if you're long, all I can say is there's your objective level to place a stop, a little bit below that trend line, not too far, because when Riot and if Bitcoin, watch Bitcoin, Riot will tend to move with Bitcoin. When the top is in and the turn comes, this one, as I showed you before, at last time I highlighted Riot and Overstock as short trade ideas, both of them dropped over 50%. So there's a lot of potential. If it hits that target I gave you earlier in the video, that 1120-ish level, that's a 57% drop, 50, almost 60% drop right there. All right, guys, we're going to wrap it up here. And I'll continue to watch a euro and the dollar and the stock market. And, of course, any other opportunities I see right now. But lately it's just kind of, not really moving. Everything's kind of stalling out lately, including the stock market. It's just, you can see the S&P 500. It's not dropping, with the euro falling like it usually does, but it's also not going up. So kind of not a lot to report. All right, I'm going to wrap it up here, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.